Kate, your take?
Yeah, I think this incredibly strong payroll report may not be so well received by the equity market. It's going to confirm for them that Fed is going to be moving more aggressively than I think some of the more dovish equity folks were hoping for. The two biggest parts here, average hourly earnings, of course, as well as the tick up in the participation rate. Those are both quite constructive for the consumer, but I think we're going to be watching the impact on margins that this labor market has.
Jason, does this get you jazzed?
I mean, I thought I'd learn nothing from this report. I learned that the U.S. economy is just in extraordinary shape in terms of where we are in jobs. The employment rate rose. This was broad-based. Leisure and hospitality added 150,000 jobs in January as this virus was surging. The wage number, though, really underscore that. I think that's the biggest news out of this report. Up 0.7%. Last year, it was up about an average of 0.4% per month. We're seeing no sign of wages slowing down. That's going to feed into service sector prices. We're going to see 2022 is going to be the year of services inflation, replacing the year of goods inflation we had in 2021. Right. The Fed's going to be thinking about 50 basis points, even if they don't ultimately do it.
So let me go to Diana. I mean, is this a good news, bad news story? I mean, the markets, you can see it right now, the Dow selling off in large part because I imagine they think the Fed's going to have to move even faster.
Right. This certainly does give the green light for these 6 potential 25 basis point increases that Chairman Powell is thinking about. But when we look at these earnings numbers, we have to remember that year-over-year inflation last month was 7%. We're going to get the next numbers next week, but these still are not real increases in earnings. We also have to think that how much better could this have been if we didn't have all these regulations preventing people from working, shutting down the energy sector, telling people they had to go home if they had the mildest signs of Omicron. We see these truck drivers in Canada who are protesting the vaccine mandate. So these are good numbers, but I think they could have been even better if we were not discouraging people from working in so many sectors.
Nella, what do you think?
Hey, Andrew.
Steve.
Andrew, just very, very quickly.
Yeah.
Yeah, the probability of that 50 basis point rate hike is, well, it shot up to 33% for a little bit there. It had been in the low 20s. So a bit of a bet. I think it's unlikely, but I'm not going to argue with Jason because there's not a lot of time. But it is up.
Steve, I think it's unlikely too, but I think it's less unlikely than it was an hour ago.
Now, what do you think?
Raises the probability. You and I can agree.
I think that this is unequivocally good news, the report, but it's also a bit mystifying. I celebrate the increase in the labor force participation rate, but to think that that happened during a time of surging COVID cases is something that makes me a little skeptical of these numbers. I think this is one of those reports that we really need some some other evidence and agreement. But what we know going into the report is that job listings were strong. We were seeing hiring was strong. And then to circle back on Jason's point on wages, we did see some strong wage growth in the fourth quarter of last year, particularly for younger workers. But we also saw some wage growth in office jobs, information, professional business services. So this is not just a leisure and hospitality story. We're seeing wage growth across the board, and that is the number to watch, along with whether this labor force participation rate really has legs.
But it's not real wage growth. It's nominal wage growth we're talking about.
Yeah.
Jason, is it possible that the increase in the participation rate is due to the re-benchmarking, that they have different bases here, that they re-benchmark the household survey here, or am I missing something?
I mean, look, if you look at the level, the revised population control is negative, whereas the headline one is positive. So if you take that into account, it changes the level. Usually it doesn't change the rate very much. And so when we're looking at that rate going up, we tend to believe that even with the population control. But that's a large discrepancy there in the level. So we'll need to dig into that a little bit more.
Final word to Javier. What do you think?
go back on this wage story because there are some sectors that are seeing wage growth top inflation. So that's what we have to keep in mind, that this has been an uneven recovery. And there are some sectors that are really accelerating through it, and those also that are being left behind. Right. Those are usually the more low-paying sectors.
Fair enough. I got to leave the final word to Javier.
You know, based on the conversations we were having, we were set to say a jobs number between 250,000 to 300,000. So to hear, you know, north of 450,000, we're delighted, obviously. Look, I represent the people on the front lines of the crisis. They're the small and medium-sized businesses that are driving this job growth nationwide. And they're still telling me that, look, sure, we can celebrate, but we need to stay focused. We need to continue to try to stabilize the economy. You know, we need a stable political environment. We need to manage inflation. And, you know, we need a healthy and prepared workforce that's ready to continue to hit it along with us. You do that, and you'll get a small business community that will continue to grow, continue to create jobs, and continue to drive the American economy. We're delighted at the news.
Shepard Smith here. Thanks for watching CNBC on YouTube.